Well, thank you guys for joining us today. We are doing our first in a series of webinars for the tax year 2022. This first one is your property tax bill. This is the month of January and the deadline is quickly approaching for paying your tax bill. So we wanted to share some important information that you might need to know. We'll start off real quickly with my name. My name is Marya Crigler. I'm the Chief Appraiser of Travis Central Appraisal District. And we also have with us Bruce Elfant. He's the Tax Assessor-Collector for Travis County. And he joins us today to also be a presenter during the webinar. If you have any questions as we're going through the webinar, feel free to just type your question in the Q&A box. We'll be monitoring that. And if there's something that we can answer in line while we're doing the presentation, we will answer it then, or we'll come back at the end of the webinar and answer as many questions as we can. And again, that's in the Q&A box that you've got on your Zoom meeting. I'll start off by explaining the differences between the appraisal district and the tax office. And I am the Chief Appraiser of the Appraisal District, and our role is a little bit different than the role of Bruce's as the Assessor-Collector in the tax office. So we are two different organizations. A lot of the times we share information. A lot of the work that Bruce does is based on the information, the appraisal role that is generated at the appraisal district. But we are two separate offices and we have two different roles that we play in the property tax system. At the appraisal district, our goal and our role is to appraise properties. We determine market values. The assessment date is January 1st of each year. And then we'll send out notices of appraised value to property owners, letting them know what the market value we determined on their property is. Then we handle any protest, we administer any exemptions, and then we take in the property deferral applications. On the other side of the equation is the Assessor-Collector, and that's Bruce, and he actually collects and sends out property tax bills. He collects property tax payments, and then he handles any non-property tax issues, including vehicle registration, placards for people with disabilities, alcohol beverage permits, and court costs. Again, I want to really stress voter registration is another task that he handles in the tax office. The calendar for property tax system is as follows. January 1st is the assessment date. That's when property values are set. Whatever state your property is in on January 1st, that's where we appraise it. April 1st is when we start sending out notices of appraised value. And they'll go out through the entire month of April, but April 1st is usually the earliest that they will go out. May 15th is the deadline to file a protest. July 25th is the date to certify the appraisal roll, meaning we provide that information to the taxing entities so that in August and September, they can calculate their tax rates. Then in October, Bruce and his staff start their job and they start mailing property tax bills to property owners. In November, you've got the voter election approval of any tax rates that go above a voter approval rate. And then by January 31st, the property tax bill payments are due. For the appraisal district, there is a difference between your market value and your tax rate. Just because your market value has increased, it does not necessarily mean that your tax bill will increase. A lot of that equation is based on not only the appraised value, but also the tax rates that get set on by the taxing entities. So the market value really is only to determine your portion of the overall tax burden, so that each person pays their fair share based on the value of their property. The taxing entities, and that's separate from Bruce and I, that's going to be your school boards, your city council, your commissioner's court. They are the taxing entities, and they set the actual budgets and they set the tax rates necessary to fulfill those budgets. And so those tax rates are what determine your overall property tax bill. And again, those tax rates with your appraised value kind of divvy out that tax burden. But again, taxing entities are setting the budgets and they're setting the tax rates. The appraisal district, all we do is appraise properties, and the tax office, all they do is set out the tax bills. But there's a real key player in the middle of that, and that's your taxing entities setting the budgets and the tax rates that also play a role. important dates. And I think, Bruce, I'll turn this over to you because these are a lot of the important dates for you and the tax bills that you send out.
Sure, thanks. So the first part of the year is spent with the appraisal district. They're appraising property, they're handling the protests, and then in October, that's when the entities have set their tax rates, and the appraisal district has appraised the property, and then we take the tax rate and the appraisals, and we calculate the tax bills. And we send out tax bills anywhere from October 1st to November 1st, depending on how quickly we receive information from all the entities. We don't just collect for the city of Austin and Travis County and the school districts. We collect for 140 taxing jurisdictions in Travis County that assess taxes, the emergency services districts. And we have all kinds of districts in Travis County that we collect for. So we send out the bills beginning October, November, and the end of the year, December 31st, is the deadline if you want to claim the IRS deduction. And in recent years, the feds changed it to where you can only deduct the, I believe, the first $10,000 of your property tax bill. And so if your bill is not above 10, or it's the next 10,000, if your bill's not above $10,000, then you're not going to be able to deduct anything. And it's above $10,000, you'll be able to deduct whatever it is above. That's right, Marya, right?
I think you can get deduct the first 10,000.
Okay, the first 10,000 and not above the 10,000. So it has changed, and not as many people actually pay their bill by the end of the year anymore as they used to because of the change. The drop dead date for paying your taxes is the end of January, January 31st. And it's important to have it into us or have a postmark by that date. And we may talk about this, or maybe a slide about postmarks. If we have a late postmark, we're required by law to go by the postmark. It doesn't really matter when you put it in the mailbox. And I set aside a lot of time in early February to have people come explain to me how they sent their bill in on time, and they, for whatever reason, didn't get a timely postmark. I would strongly advise not to mail your tax bill at the last minute. Mail it a week before, and we would prefer you go online, and we'll talk about that in a little bit. And then the next day, literally the next minute, at 12:01 a.m. on February 1st, state law requires that penalty and interest kick in, and it starts at 7%, and it goes up 2% each month after that, up to a cap of 24%. So it's really it's really expensive, and sadly we have people who just, they don't want to deal with it, and they wait long enough to where that penalty and interest is so high that they're having trouble paying the penalty and interest, let alone the principal. And so we really want to encourage people who have issues with being able to pay the whole property tax bill to contact us immediately, and we will work with you to get you on a payment plan. And we're going to try to be aggressive, not because we want to collect all the money, but we do. But the faster you pay the property tax bill, the less exposure you're going to have to that penalty and interest. And so it's really in everybody's interest to try to have an aggressive payment plan. But we're going to work with you to try to figure out what's realistic as well. So I guess we can go to the next slide. I probably beat that one to death. COVID precautions. The appraisal district, our office, all kinds of government offices and private sector companies are having to deal with COVID. We would encourage people to do business with us as much as possible online. You can pay your property tax by e-check online. You can pay it by credit card, but it's a lot more expensive with credit card. You can do your vehicle renewal online, your registration renewal. The only things that you have to come here for is titles and getting your placards. And you can go on our website and get an appointment for that. Be patient with us. Like a lot of businesses, we have a lot of vacancies because people don't want to work in customer-facing jobs right now. And so we're struggling with vacancies, and we're struggling with employees being out for COVID-related issues. And so we don't have a full contingent of staff, and the backlogs at our office are pretty daunting right now. And so you want to, as soon as you know that you need to renew your vehicle registration or title, you want to jump on it just really quick. So actually, I should pay attention to the slide a little bit. So we have drop boxes at airport and Pflugerville tax offices if you want to drop your property tax payment in the drop box. And you can also drop voter registration cards in the drop box. You can mail them, but you know, it's costing more to mail them, and we would prefer you do it online anyway. You can go online and pay by e-check for just $1. And the great thing about that is you get an immediate receipt. As soon as you go online, you will get an electronic receipt. And we don't send out receipts anymore because it's so expensive. And we just give out receipts on request. And so online, you get immediate receipt. And you get a timestamp of when it's paid, so we don't have the issue about, well, I mailed it on time. I don't know why I didn't get a postmark. We have a drive-through office at Airport, McKinney Falls, and Pflugerville. And you can pay your property taxes there, although we prefer you to go online. And you can get your vehicle registration and your placards through the drive-through. And then if you go to our website, you can make appointments for the Airport, Pflugerville, Oak Hill. Next week, we're opening our McKinney Falls office to appointments that have been closed for renovations, and it's about to be reopened. We're excited about that. And we're very hopeful for those of you who live in the northwest part of the county that we're going to be opening a satellite office near 620 and 2222 in the near future. So stay tuned for that. The last part of this, you can pay by credit card, but we cannot eat the 3% fee. And so the credit card is better for vehicle registration than it is for property tax. You have to have a really good credit card where you're getting a lot of airline miles to want to pay a property tax bill online by credit card. But we do have a deal with our vendor. If you pay by PayPal, it is interest-free for 90 days. And so that buys you time to figure out how you're going to pay the whole thing. And I think that's it for that slide. Next slide, please. We talked about postmarks briefly. It's got to be a postal service postmark. And that's the only thing we can go by. I mean, I hear all kinds of interesting stories about, I mailed it 6 days in advance. I don't know why I didn't get a timely postmark. The postal service is probably not the most reliable way to pay your property taxes anymore. That's why we're encouraging people to go online, and you get an immediate timestamp, you get an immediate receipt. And so we're hoping that people will kind of migrate to online payment. Let's see. Simple, secure. Also, you know, we send out over 250,000 tax bills every year, or actually close to 400,000 tax bills every year. And it costs us $250,000 to send those out. And those are taxpayer dollars that we could be saving. So we're encouraging people to go to our office and sign up for e-bill. And the great thing about e-bill, other than saving trees and all, is that you will be the first to get your tax bill. When we send out the paper tax bills, it takes us weeks and weeks to send them all out because there's so many. And we get the calls, I haven't got my tax bill yet, I haven't got my tax bill. If you sign up for e-bill, you'll have your bill at the front end of our process for sending them out. And then you can pay online by e-check for just $1. And we've saved all kinds of trees. You can also schedule future payments through ACH and have it automatically paid if that's something you want to do. We want you to update your mailing address. We get a lot of calls where I didn't get my tax bill, and it's because we didn't get an updated mailing address. We sent it to an old address. You can download your receipt and, of course, apply for a payment plan. And I think the next slide is the payment plan slide. Let's see. These are the payment options. If you're 65 or older, disabled, or disabled veteran, you can pay in 4 quarterly installments with no penalty and interest. So you don't have to pay the whole thing up front. And we will set out the calendar for when you have to pay. You can also defer your taxes. And instead of that 7% interest that goes up to 24%, it's a flat 5%. But this isn't for everybody. You have to kind of think through. whether this is going to work for you. And you need to check with your mortgage company if you still have a mortgage as to whether they'll allow you to do a deferral. But if you're over 65 and you don't really care what's going to happen to your house down the road, this might be a great thing. If you're over 65 and you have kids and you want the house to go to your kids or you want the house to go to somebody else, that 5% interest does accrue along with the taxes every year. And so if you defer your taxes and live for another 20 or 30 years, there's going to be a big tax bill at the end at that point. And state law gives the property owner 180 days to resolve the property tax bill. So one of your heirs would have to pay off that property tax bill within 180 days or risk having the house foreclosed on and sold on the courthouse steps. So deferral could be a good thing for you, but it might not be. So you have to kind of think through that and see if that really works for you. Delinquent payment plans, as I said, the penalty interest starts at 7%. So we really want to encourage people to get on that as quick as they can. We understand that not everybody can pay all their taxes at one time. Property taxes are very expensive in Texas. And so we want to work with people as much as we can and try to get them on a plan that gets the payment that what's owed knocked down and makes sense for the financial situation for the people involved. And so we will try to be aggressive with you, not mentally, not emotionally, but we want to get you on a payment plan that's just going to knock down that penalty and interest as fast as possible. And the good thing about payment plans, you reach an agreement with us. We cannot foreclose on properties as long as the plan is being complied with. Okay, next slide, please. All right, Marya touched on this. We all get agitated about property taxes and the process, and we don't like this and we don't like that. The people who make these rules are our elected officials at the legislature primarily. And it's so important to register and vote and understand what the issues are, and go talk to your representatives about your concerns and your frustrations. Talk to us about our concerns and frustrations. But we really want to encourage people to vote in all the elections. It's kind of our responsibility as citizens to be good citizens and to vote and provide the feedback and communicate with our elected officials. There's going to be a special election in early May. The legislature is allowing the voters to decide whether we want to increase the homestead exemption. Is that right, Marya?
Yes.
And typically, a May election will have 15 to 20% turnout. That means that the majority of 15 or 20% are going to determine the result of that election for the other 80%. And that's really not how democracy is supposed to work. So the League of Women Voters has wonderful voters guide, whether it's for candidates on the ballot or whether it's propositions on the ballot, to where you can understand the pros and cons of all the candidates and the issues. And it's just so important that we have more involvement and turnout in these elections. And as a voter registrar, that's my job, is to make sure people are registered to vote. And last cycle, we had a 97% rate of voter registration, which was the highest of any urban county. But it's very dynamic. 54 people are moving here every day. People are turning 18 every day. People are becoming citizens every day. People are getting out of prison and getting their rights back every day. And people are moving within the county every day and need to update their voter registration address to ensure that they're going to remain on the rolls. And so I encourage you to get registered, check to make sure you're registered at your current address, and most important, get out there and exercise your civic responsibility as citizens, and weigh in on these important candidate races and the propositions, and especially this May election. And I think that is it for me.
You've got one more.
Oh, we're moving. Thank you. We are moving sometime in hopefully February or March. Right now, our main office is at 5501 Airport. We will be moving to Ridge Point Drive, which is the old Cancer Society building. It's really at the northeast intersection of 183 and 290. And we don't have a move date yet, but we will be moving there shortly. But we have increased the capacity of our satellite offices, and so we'll be able to accommodate more in-person and appointment and drive-through volume at our satellite offices. So not everybody will have to come to the Ridgepoint office, and we will have more information as soon as we can get information from the contractor precisely when we can take ownership of the property. And so now I think I'm done. So thank you all so much. Oh, there's more.
Well, we have the website, travistaxes.com, that will help you understand your property tax bill. It kind of shows you the impact of the proposed tax rates, the voter approval rate. There are a lot of tax rates that are contemplated before the actual rates are adopted. And you have an opportunity at the public hearings to weigh in on those decisions that are being made by your elected officials. So we have a website out there called travistaxes.com. That information is put out there in September, so that you guys, in August and September, so that you can see when they're going to have their public hearings. You can go to their websites, because their websites are linked on that website, and you can see what are they talking about in terms of their budgets and their budget anticipations, and you can have contact information for contacting your entities. Because again, I can't stress how important that part is in the property tax equation. Bruce and I do our things because we are mandated by state tax constitution and laws, and we don't have discretion in the work that we do. We're required to do these things. At the appraisal district, we get tested to ensure that we're doing these things appropriately. But where we do have discretion as citizens is in the budgets that are set by our taxing entities and the tax rates that they do set. And we don't see enough participation in that side of the equation. A lot of people will come to the appraisal district and protest their values because they're unhappy about the amount of taxes that they're paying, but they won't go and talk to the city councils or the county commissioners about the budgets that are being set. And that's really important. And we want to make sure that everybody has awareness of that other portion of the equation, so that in the future, you can have a stronger role in directing how much you actually will ultimately pay in property taxes. So this is just a plug for the travistaxes.com website. Again, we start putting new information out on that website starting in August, and then the taxing entities start setting their tax rates in August and September. So that's a really valuable tool for you so that you can participate in that part of the property tax equation. Excuse me. So the late remedies, you know, we've already gone through our protests. You've gotten your tax bills. What do you do when you've gotten your tax bill and you know, you've got some concerns about it? There are very limited opportunities at this point to protest your appraised value. We can still correct an error if it's a clerical error. Meaning that, you know, the number was mistyped. We typed 10,000 instead of 1,000. We can correct errors for multiple appraisals. So if it's on the tax roll more than once, we can correct those kind of things. If the property is on the roll, but it didn't exist, this is particularly for business personal property, we can do non-existent properties and remove those remove those from the appraisal roll. We can also correct errors in ownership information. If we are notating that the wrong owner on the property, we can make those kind of corrections. But there are very, very limited opportunities for corrections. Now, there is also one more opportunity for correction, and that's for substantial errors. And that is if the error, and it has to be at least 33% over market value if it's a non-homestead or commercial property, or 25% over the market value of the property if it's something that has a homestead. So if you feel that your appraised value is in error and you think the error is more than 25% of the market value, and the market value is what a property would sell for. So if you think the appraisal district has it overappraised by more than 25%, you still can file a motion to correct. Now that filing of that motion to correct must be done before the taxes become delinquent. and they become delinquent starting February 1st. So you'll have to file that substantial error correction motion with the appraisal district before February 1st. Get it in by January 31st. And again, as Bruce has said, you do it as quickly as you can. Don't wait on that. And we go by the postmark. So if you're going to drop it in the mail and send it by mail, make sure you go inside to the post office and have them hand stamp a postmark on that. Because as a general rule, if you just drop it in the blue box, the post office does not always postmark those. So you want to make sure that you get a postmark on your envelope to prove that it has been sent in timely. And the best way to do that is to go into the post office and ask them to hand cancel that and do a postmark on your envelope.
And a lot of times we have people who drop them in the mailbox and they didn't read that the last pickup was at 4:30 and they dropped it in at 9 o'clock and they're going to get a next day postmark, and there's just nothing I can do about that.
The other thing that you can do is a homestead exemption, and we've had a couple questions about homestead exemptions. You can file a late homestead exemption. Generally, homestead exemptions are filed in April, and the deadline to file your homestead exemption is April. However, you've got lots of opportunities to file a late homestead exemption. You can file a late homestead exemption up to 2 years late. So 2 years after you qualify for your exemption, you can file a homestead exemption application. You just have to put on the application the years that you are requesting your homestead for. So they are up to 2 years late. And again, when we think about the late exemption and how you can calculate when your 2 years are up, it's typically by the delinquency date by February 1st. So again, you can file a late homestead exemption. It's not too late. You may get it or be eligible for a refund of your property taxes if they've already been paid and you filed a late application and it is approved. If you recently purchased your property and it did not have a homestead exemption claim for the year, you may be able to claim your homestead exemption early. Now, this is a new law that came into play for 2022. So if you are purchasing your property moving forward, you may be able to claim your homestead exemption early. Otherwise, the typical qualification date for a homestead exemption is January 1st. And we had a couple questions about homestead exemptions. One person asked, I'm over 65. How does the homestead exemption work? And do I need to apply for anything that I may be missing to reduce my taxes? So homestead exemptions are great for property owners, and you've got a general homestead exemption, but you also have an over 65 exemption, a disabled person exemption, or a 100% disabled veterans homestead exemption. And they all provide different benefits. The general homestead exemption is state mandated for school districts, meaning the state requires all school districts to provide a general homestead exemption. And that will remove $10,000, $20,000 off of your appraised value for a general homestead exemption. So that is state mandated. If you do a over 65 exemption, and again, it's state mandated for school districts, then that will take an additional $10,000 off of your appraised value. But the beauty of an over 65 exemption for people that are over 65 is that it will create a tax ceiling on your school district taxes, meaning the year that you qualify for your over 65 exemption, your taxes will be frozen for your school district at that amount, and they'll never go above that amount. They may go below it, but it will never go above that. And since your school taxes comprise over 50% of your total tax bill, that is a tremendous savings for our property owners that are over age 65. That also applies if you are a disabled person. You get the tax ceiling for your disabled person's exemption. You can also get a general homestead exemption for other taxing entities, but they are not state mandated. Those are local option exemptions. And it varies. The percentage of the exemption can vary. It can go up to 20%. And Travis County and the city of Austin are both doing the maximum 20% exemption on the homestead exemptions. But other taxing entities may also do a percentage exemption on a homestead exemption. that can include your MUDs, your emergency service districts. They all have a local option, but that is something that is voted on by the governing body of that taxing entity. They can also do an over 65 exemption as well as a local option. Again, the school district is state mandated. They're required by law to do that, but the other taxing entities have a local option to choose whether or not they're going to grant an over 65 exemption. And if they do, they have to grant it in a specific dollar amount. So they will grant you an additional $100,000 of an exemption, and it takes an additional $100,000 off of your appraised value if you are over 65. Each entity chooses the amount of that exemption, so it varies widely depending upon what kind of taxing entity you are. But we do have that information posted on our website, and we will be doing another webinar later that is all about homestead exemptions, and that will come up in probably late March or April, but we will do a specific webinar all about exemptions. This is just to kind of give you some brief information and some highlights in case you are looking to do a late exemption application. You can file for deferral, and I know Bruce talked about that. If you're a senior or someone with a disability, the property taxes can be deferred until you no longer own the property. They will continue to accrue, and there will be a 5% interest applied to that. For property owners with a homestead exemption, your taxes may be deferred on a portion of the increase in your property's market value. But again, as Bruce stated, it's really important for you to check with your mortgage company before you do that. We don't want you to be in violation of your mortgage agreement by doing a deferral. So we strongly encourage you to check with your mortgage company before you file a deferral with the appraisal district or the tax office. Bruce mentioned May 7th, election. It's a really, really important election. This is an election for property owners to vote to choose to increase your homestead exemption for school districts from 25,000 to 40,000. Now, again, you've got to vote. It's pending voter approval. So we'll need voters to go out and vote to approve the increase of the homestead exemption for school taxes from the state mandated 25,000 up to 40,000. And again, that election is on May 7th of 2022. It will also have on the ballot an item for adjusting the tax ceiling for property owners who are over 65. Typically, when property owners have a tax ceiling, their taxes are frozen. Then if the legislature does anything that provides property tax relief, those over 65 seniors typically don't see that because their taxes are already frozen and there's nothing new to calculate. What will be on the ballot this upcoming May 7th election is an opportunity for seniors and people over 65 to have an adjustment to their tax ceilings, to reduce those tax ceilings based on some other property tax relief that the legislature has done that did not apply to those particular property owners. Again, that's the May 7th election. If you need more information, if you need to check to see if you are registered to vote, you can go to votetravis.com. Bruce, I think the last day to register to vote is April 7th. Right. And then the election would be May 7th. 30
days out, yes.
So
we have a March primary election, and the deadline to vote in the March primary election is January 31st. So that's coming up soon.
Coming up really soon. So again, we really strongly encourage you guys to participate. Again, it's part of our democracy, but it also has a really strong impact on you and your property tax bills. We will be doing our very next webinar, will be appraisal information for new homeowners. And that's going to be on Wednesday, February 23rd at 11:30. So you can go online and register for that webinar. And again, as I said, we have a whole series of webinars that we do. These webinars are recorded, so it will be available on our website. If you weren't able to see the entire webinar or you want to review another portion of it, feel free to go and watch that on the webinar. I'm going to go take a look at some of the questions that we've got still pending and answer as many as we can. We have one person that said that they purchased their house on January of 2021, and they're in the process of completing their homestead exemption. And do they submit it for 2021 or for 2022? So if you purchased your home in January of 2021, you would not qualify for the homestead exemption until January 1st of 2022, because the law that changed that allowed you to file early was not effective until January 1st of 2022. So if you purchase your home January of 2021, you will file your exemption application and you will be filing for tax year 2022. And again, the general deadline for filing your homestead application is April 30th. But again, you can file those applications late. But if you want to see your tax relief, you want to see it reflected in your notice of appraised value, I would say file it as early as you can and get that submitted. Just like Bruce mentioned with his issues with finding enough staff and having staff out due to sickness, we're in the same boat as he is. There's a lot of staffing shortages that we're dealing with. So there are some delays. It's taking us a little bit longer to process the exemption applications. We have you in the queue, but it may take us up to 90 days to get them processed. So please be patient. As soon as we process the application, it'll show up on our website. So I would say 90 days after you file your application, go to our website and you can look on our website to see if your application has been approved and the exemption is being applied to your property. The question is how would you pay by PayPal? Bruce, can you answer that one?
I didn't mean PayPal. I meant by a credit card that our vendor makes available.
Okay.
Yeah, I apologize for that.
Okay. And then will you cover installment payments for properties not in a disaster area and those that are in a disaster area?
If there's, say we have a tornado or some other disaster, the taxing entities have to pass a resolution declaring a disaster area before we could do anything. And it applies to reappraisal. I mean, if there's a tornado and all of a sudden your home is flattened, then the value is going to be a little bit different than it was before. But the taxing entity has to pass a resolution declaring a disaster area, and that triggers what Marya would do, and that triggers our ability to allow for quarterly payment plans.
Okay. The next question is why are properties taxed on current market value? We bought our house in 2005 for approximately $300,000. Now the county is saying it's worth $800,000. I didn't buy an $800,000 house, nor do I have $800,000 unless I sell it. It's supposedly sold for that amount. Why taxes on current market value? It is the Texas Constitution and the laws of the state that we must appraise property on their current market value as of January 1st of each year. And it defines the market value as being what a property would sell for on the open market between a willing buyer and a willing seller, meaning that there are no extenuating circumstances that would impact the market value or what the property would sell for. So we are by law required to appraise properties every year and determine the market value based on what the property would sell for as of January 1st. And so that is why we appraise it every year. We are required to do that by law. Now, we don't set the market of what properties are selling for. Our work is always done in hindsight. We look at sales that occurred during the year of 2021 to determine our appraised values as of January 1st of 2022. So we're looking to see what has happened in the market in the past year to develop our appraised values for January 1st of 2022. Again, we're just reporting what we see in the market in terms of our appraised values. We don't set the market, but we do the appraisals for each home, and we are required by law to estimate what a property would sell for, what its value would be if it were to sell. We get tested by the state every year to determine that we are making sure that we are following all of the general accepted appraisal methods and standards, and to make sure that our level of appraisal is accurate. So we have a lot of people double checking the work that we're doing to ensure that we are doing and following the law in appraising properties. Again, this is not something that is discretionary for the appraisal district. We do not have a choice in appraising properties. We do not have a choice in setting them at market value. It is something that we are required to do by state law, and that's what we try to do to the best of our ability. Another property owner asked, I just looked at my appraisal for 2022, but there's nothing there. How can I protest by January 31st? Okay, so by January 31st, that's for a late protest for tax year 2021. So if you want to file a late protest for substantial error of the 2021 appraisal. Now, we sent out the 2021 appraisal notices in April of 2021. But if you missed your protest deadline and you still feel there's a substantial error, you still have an opportunity to file that substantial request by January 31st. But again, that's related to 2021 tax year. Your 2022 data and information will be mailed out in April of 2022. So 2022 values are not out right now. We're still in the process of analyzing the data and crunching the numbers. Those notices will go out in April of 2022, and you'll be able to file your protest. The deadline to file protest is May 15th. So that will happen later in the year. We will have another webinar in March and April that will talk about your notice of appraised value, what to expect on that, and then also have a webinar that talks about the protest process and what you need to do for that. So look for the upcoming webinars. I think we might even have some of our historical webinars out there. So if you want to see last year's webinar, feel free to go out and look at that. Can you please repeat the information about filing the homestead exemption if you buy your home this year? Okay, so if you're buying your home in 2022, the law has changed that may allow you to file your homestead exemption early. Now, there is a condition that you have to meet in order to file an exemption early for your general homestead exemption. And that is the property cannot have had a homestead claimed on it by the previous owner. So if the current owner, the owner on January 1st of 2022, has a homestead exemption in place and you purchase the home in May, you cannot file an early homestead application. The only time that you will be able to file an early homestead application is if the previous owner did not file or claim a homestead. In that case, you may be able to file it early, but again, that is only if the previous owner did not file or claim a homestead exemption on the property. We anticipate that we will see this mostly in communities of new home construction, where there are brand new homes being put on the market and being sold during the course of the year. We think that those will be the most probable people that will be able to take advantage of that new law that allows you to qualify for your homestead exemption early. And it really is to your benefit as a property owner. If the previous owner filed a homestead exemption, as the new owner, you get to continue to take advantage of that benefit of the previous owner through the remainder of the year. So it's to your advantage to take that previous owner's homestead cap, their limitation, their exemption amounts for the remainder of the year, rather than trying to establish a brand new exemption in your own name. But for those few owners that purchase a property where they don't get to inherit those benefits from the previous owner, there is an opportunity for them to file their exemption early. But again, I can't stress enough, you can only file early if an exemption had not been claimed on the property by the previous owner. For 2022, I have a 100% disabled veterans exemption. How do I get proof of this exemption so I can send it to my mortgage company? Okay, so if you have a 100% disabled veterans exemption, we put information on exemptions on our website, but if you need more information to provide to your appraisal district or to provide to your mortgage company, let the appraisal district know. Typically what the mortgage companies are going to be looking for is they're going to be looking for the tax bill that comes out. And again, tax bills don't go out until October or November. So there's very limited information that the appraisal district can provide that your mortgage company will accept. But in certain circumstances, if you need us to, we can provide you a letter confirming that your 100% disabled veterans exemption has been applied to your property. To confirm, the increase in homestead exemption for school districts would decrease our property taxes. So for the May 7th election, and for the increase in the homestead exemption, yes, it would decrease the amount of property taxes that you would pay to the school district. So the issue on the ballot on May 7th would be increasing the exemption amount, meaning the amount that gets taken off of your appraised value. It would be increasing that from $25,000 to $40,000. So that's a $15,000 increase in the amount of exemption. And that should decrease the amount of taxes you pay. Now, that may be wiped out if your tax rates go up. But in theory, yes, it should decrease the amount of taxes you would pay because that exemption is being increased pretty substantially. The next question is, my title is in a trust. What do I need to submit in order to complete my homestead exemption? You'll need to provide your trust documents indicating that you are the beneficiary of the trust, and that needs to be included with your homestead application. Another important thing, and a reminder for people that are submitting their homestead application, is when you submit your application for your homestead, you have to include a copy of your driver's license or your state of Texas identification card. It's either your driver's license or your Texas identification card. We can't take any other forms of ID. They must be Texas issued driver's license or identification cards. And the address on those identification cards must match the address of the property that you are claiming your exemption on. If you fail to include your identification card, or if the address does not match the property you're claiming the exemption on, we cannot approve your exemption. So it's really important, if you're a brand new property owner, you're moving into a new home, please make sure that you update your information with DMV and get an updated driver's license so that you can include that with your homestead application. Did you name the law, and can that be voted and changed that it is not based on an inflated market value? That is something, to change the law, you need to talk to your state legislature. And that is in the Texas Constitution, and it is in the property tax code. And again, the definition of market value is in chapter 1.04 for definitions, and it is in the Constitution. I believe it is Article 8, Section 3. I can provide that information later, specifically to tell you where in the Texas Constitution that it states that properties must be appraised at market value. And that, again, that is something, if you want to get that law changed, you will have to go to the state legislature to get that changed. As an appraisal district, we will do whatever the legislature and the laws tell us to do, but we cannot make that change on our own. So to get that changed, it would take legislative action. Is there any cap ceiling for appraising value percentage year by year? And can a property appraise like 25% more than the previous year if the housing market is like the last year? That's a really good question. So when we do our appraisals at the appraisal district, there are going to be more than one appraised value that you'll get on your notice of appraised value. You will get your market value, which is what we do every year, January 1st, market value, what would the property sell for on January 1st of each year. If you have a homestead exemption, there is a benefit to the homestead exemption in that the year after you qualify for your homestead exemption, the increase in the appraised value is limited. Now, appraised value is different than market value. Market value is what would that property sell for. That goes up based on whatever is happening in the market. And that is just reflective. If the market goes up 50%, your market value will go up 50%. But your appraised value, if you have a homestead exemption, is limited. The appraised value can go up 10% above the last year's appraised value or the current market value, whichever is lower. Because our market has always trended up, it's usually the 10% cap, and it's called, just for general purposes, a 10% cap. So there is a 10% limitation on your appraised value. Now, again, really important, appraised value is different than market value. Market value is not limited and goes up and down to reflect what the market is saying the properties would sell for. Appraised value is limited. There's a 10% cap on your appraised value. When it comes to calculating your tax bill, you take your appraised value minus any exemption amounts that you're entitled to, and that becomes your taxable value. Excuse me. That becomes your taxable value. And the taxable value times the tax rates is what the tax bill is calculated and sent to you on. So you've got a market value, an appraised value, and a taxable value. All of that information will be on your notice of appraised value. And we will be doing a webinar specifically on notices of appraised value to explain more about that, show you some examples so you know what to expect when you get your notice of appraised value. Excuse me. Is there a way we can see what is on the ballot in May? Yes, as Bruce talked about, the League of Women's, what is it again, Bruce?
League of Women Voters. They will have a candidate and a proposition guide, and the votetravis.com will also have ballot information. They probably won't have the May ballot yet, but you'll be able to get the ballot language for all the elections at votetravis.com.
Okay, perfect. I think we've got time for probably 2 more questions. Can I submit a copy of a temporary driver's license with the application for the homestead exemption? I have not received the plastic ID in the mail yet. Yes, but we would need to see the full page of your temporary driver's license. But what we're looking for is proof that you have a certified driver's license being issued by the state of Texas and that the address matches. And our last question is, how will a new homeowner benefit from the early homestead filing law if they purchase a home condo that was not a condo on January 1st? For example, if the property on January 1st was a single family home, and then months later it was demolished and a 4-unit condo was built, how will the buyers of the condo take advantage of the early homestead exemption law if their condo will not be on the roll for 2022? That is one of those situations that is not clear in the law. For us to apply an exemption to a property, it has to have been on the appraisal roll. I can't grant an exemption on something that we are not taxing. For most people, it probably will be a benefit for you not to try to claim it early because the value of the single unit may be less than the value of the 4 brand new units. But that is something that has not been clarified by law, and we would need to get a legal opinion on how to interpret that. That's a really good question. That is really unclear in the new law if there would be any advantage to you. That is all. Again, we have recorded this session. So if you did not get to see the full thing, or if you want to let some of your friends or neighbors know, you can certainly point them to our website. It'll be posted probably tomorrow. We will have it on our website and be available for viewing. And again, our next webinar will be Wednesday, February 23rd. It's going to be about appraisal information for new homeowners. So we're going to be focusing on people that are newly purchasing their property, giving them more of an overview of the property tax system, important information that they'll need to know as homeowners. We will follow that up later in the year with additional webinars. Again, we'll do a webinar specifically on exemptions. So we will talk about that closer to the timeline when you're required to file your exemption applications. We will also do a webinar on your notice of appraised value. And we will do a webinar on the protest process and what you need to expect and what you might need to bring to be successful in your protest. I thank you very much for your time and attention today, and we hope to see you at our next webinar in February. I want to thank Bruce Elfant very much for joining me today to talk about the property tax bill. So thank you, Bruce. I appreciate you being here. We'll talk to you guys later.